Let's turn to business news now with Nona Pelletier. Hi, Nona.
Hello.
Three big financial services companies may face action for putting their own interests ahead of consumers overselling life and health insurance policies.
We've heard this before. It sounds familiar, right?
Yeah, it does. Yeah,
okay,
it does.
so this is a continuing investigation. So the FMA, the Financial Markets Authority, originally looked at companies that sell a variety of different brands, so more than one company's products, and are often incentivized to write new policies for clients who may not need them. So in other words, you have a life insurance policy, they try and sell you another one, and then they get a trip to Fiji or somewhere as a result of that. Yeah, Winnipeg. Yeah. Well, that would be unusual, wouldn't it? But in any case, the FMA followed this up with an investigation into organizations that manufacture and sell their own products through their own staff, so their own advisors, financial advisors, doing much the same kind of thing.
Right.
Now, they looked at 11 of these companies, and they found that 2 of them were doing, very well, big tick. 6 of them needed to improve, and 3 of them, well, more action may be required. That's formal action against them, and that can range from anything from a fine to, a slap on the wrist or what have you. So what they found was that they were selling products to consumers that disadvantage the consumer, and the consumer doesn't even know what the difference is.
So this is not a world away from what they were looking at in Australia with the banks, right?
Yeah, it's a little, it's similar.
In a way. So it's opportunistic.
Yes.
And that's probably a pretty generous description. It's interesting, the FMA, we've talked about the FMA quite a lot in the last year or two. They're really flexing their muscles in quite a wonderful way, I think.
Well, in some ways they certainly are, yes. Yeah. And in this particular instance, they're concerned that people buy insurance and they don't really know what they're buying. And we spoke earlier to the FMA's Liam Mason, who is, I think he's the director of their regulation. We have a little bit of what he had to say.
One of the reasons that we keep paying attention to insurance is that it really is an area where hidden harms are the problem. That, as we say in the report, most of the time a customer who might have been disadvantaged by non-disclosure, by differences in benefits between one policy or another, they'll never know, or they'll only know when they try to claim. And so it really is an area of hidden harms, and that's why it's quite dangerous to try to go from metrics such as complaints or even declined claims, because we know the majority of life insurance, of course, is never claimed on.
And that's the FMA's Director of Regulation, Liam Mason.
Hidden harms, use that phrase twice, and that comes back to the point you were making that...
it's one thing.
Yeah, people don't even know.
Yeah,
okay.
Until they got to make a claim, right?
Yeah. So. Okay, that's fascinating. Bank profits are down. What are the reasons for that?
Yes, indeed. They're down in the first quarter. Now, that's partly because the government has changed the regulations on how banks or others account for anticipated losses on bad debts. So normally you would claim on actual losses. Now they must make a declaration on anticipated losses. So that's cost them quite a bit. But they're also making less on their interest rate margins, and the quality of their assets has declined. And so those things combined means that they made 11% less in their net profit. That's a combined New Zealand bank number. That's $1.2 billion compared with what they were making in the December quarter. So an 11% fall in the first quarter. Now that's expected to carry on. KPMG has done a review. They do a review of this all the time, and they're saying, hey, these are things that could continue because banks are facing a number of risks globally. There's a lot of things that are going on with the financial review in Australia that's tightening the screws. The FMA is onto them as well. So overall, you can expect the banking sector to probably their profits will moderate from here on.
Fascinating tonight, Nona. Thank you. What did the markets do today?
Well, let's see. So our market was down a little bit, just about 1/3%. 33 points to 8,946. Our dollar is trading at 67.7 US. That's partly because the US Federal Reserve has indicated that they're going to continue to raise interest rates there. 91.8 Australian, which is where it's been for a while, as well as 51.7 British pence.
Nona Pelletier here in Auckland. Thank you very much indeed.